Hi, I'm Anisha Jaiswal Timbruni. Would like to proceed with my presentations. The first introduction of cash flow statements are the statements that indicate several cash receipts and amounts of cash disbursements or payment have done during a specific period. The period that can be in years, quarters, or month. It depends on the company how they issue it. The major business activities result either net cash inflow or net cash outflow from operating, financing, and investing activities. Cash flow statements are prepared to disclose the changes in working capital. Next are the objectives of cash flow statement. Highlights cash flow from different activities and short-term planning. Cash flow information helps to understand liquidity, efficient cash management, prediction of sickness, comparison of budget, and cash positions. In part A of my project, I have determined the income statement, which can also be called as profit and loss statement, in a report which shows the income and expenses, which helps in determining the profit and losses of a company or a specific time. The cash flow statement is the financial statement that provides club data of all the incoming cash of the company from all its active operations and external investments, which also includes the outflow of cash used for business activities and investments for given time durations. The investors find both the income statement and income cash flow statement useful because both are out of three components of a financial systems, which helps the investors to analyze business performances of a company via revenues, expenses, and profits that a company generates in a particular time durations. Though the data provided by are on different levels, as cash flows shows a detailed view, but they both are inextricably linked. In part B, the major sources of cash flow for firms are for three companies. It's been given in this presentation for Santos, Fantastic, and BHP. The trends in cash flow from operations for each firm is for cash flow for operations are basically the principal revenues generating activities for the company. If we talk about the cash flow trend of companies Santos and BHP, both are having good growth in generating the cash, as there was an exponential increase every year starting from 2017 to 2019. But in case of Fantastic Limited, the company operations were not able to generate the cash flow, as they hit a large decrease in the cash flow in 2018 and compared to 2017, but was able to manage a little in 2019. The major reasons for the difference between these two figures for contrast of cash flow from operations with net flow profit after tax in 2017 was 14.77 billion, including basic outstanding shares, but the cash flow was 22.28 billion. There is a difference between both the net profit of the cash flow operations and income statement, because in the cash flow operations statement the depreciation, depletion, or and the changing in working capital is not added, which in case of BHP Limited 2017 annual report is 8.2 billion for depreciation, depletion, and amortization in a negative 319.56 billion. As per the definition, the income statement is just the calculation of the revenue, profit, and loss, but whereas the cash flow operation statement calculates the basic of the entitles like depreciation, depletion, and amortization, and changes in working capital. When compared to enough cash from operations to pay for all the capital expenditures, yes, in case of Santos and BHP Limited, for the year 2017, Santos net operation cash flow was 1.62 billion and capital expenditure was 891.04 million. For the same year for BHP Limited, net operations cash flow was 22.28 billion and capital expenditure was 6.18 billion. But in case of Fantastic, for the same year, that is 2017, no company was using financial cash flow to run the operations. Did the cash flow from the operations cover the dividend payment by the firms? Yes, in case of Santos for the year 2018 and 2019. In case of BHP Limited, all 3 years, that was 2017, 18 and 19. The excess cash flow from operations for Santos BHP, yes, they were able to generate the excess cash from the operations. They invested mainly in capital expenditure, that too on the fixed assets, for 3 years to create opportunity for more cash inflow. But not in case of Fantastic. They use cash from the financial activities to pay for capital expenditure. Working capital, current assets and liability accounts and other cash and cash equivalent as sources of each cash uses of cash. In BHP, used current assets and liabilities other than cash. They inventory, account receivables and accounts payables as working capital for generating operations cash flow. Major items affected cash flow for firms in case of Santos and BHP. The major were operations activities, and other than that was capital expenditure. But in case of Fantastic, the major sources were financial activities. The trend shows for Santos, the capital expenditure increases in 2019 to 1.26 billion from 771.43 million to in 2018. For BHP Limited, Fantastic Limited, there is an increase in capital expenditure every year exponentially. The dividends for companies Santos and BHP were able to pay the dividends, but Fantastic hadn't paid any dividend as their operations cash flow was on negative side. Santos paid dividend in 2018, there no dividends in 2017, and BHP paid the dividends all in 3 years for 2017, 18 and 19 in a row. For 3 years in 2017, the company larger capital expenditure since 2017 was for Santos, so the company had issues in debt financing for the growing capital expenditure. In case of Fantastic Limited, for a company has made new issues of debt every year as their operational cash flow was negative, so they were forced to issue new debts to compensate the negative operational cash flow. Working capital accounts for BHP, while receiving declined the inventory, there was visible insurance for other liabilities. Therefore, in 2017, the working capital declined, which increases the operational cash flow. However, the operational cash flow was negative affected in 2018 to 19 as the changes in working capital was on positive side and operational cash flow bends towards negative side as a result. Next comes the BHP Limited is quite well placed because it has been creating positive cash flows in operations, which new long-term debts to cover the bridges over the shortfall in capital expenditure and other expenses. As the trend over 3 years, that is from 2017 to 2019, BHP Limited has generated excess operational flow, and that was used to repay a larger part of the company's existing debts. BHP Limited has been able to grow the operating cash over a year on basis of its provided cover for the capital expenditure and dividend expenses as well. Conclusion for the overall cash flow statements and objectives, highlighting cash flow from different activities as the account system in 3 statements as follows: for balance sheet, income statement and cash flow statement. All the 3 are important equally, which shows the income and used are for investors to evaluate a company's capacity to generate cash as well as profits, as all the companies that generate good profits will not have some amount of cash in hand, or company in generating goods amount of cash will be good in the with the profits. Thank you.